Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is fellow breaking news reporter Derek Saul. Derek, thanks for hopping on.
Of course, excited to chat.
I'm excited to talk about this, a lot of things to discuss. I want you to talk about the banks that went under within the past few days, Silicon Valley and Signature, and the president's response to these banks failing. But first, how did these banks fail?
Yeah, so starting, some people will say there were three bank failures. That's not technically correct. So Silicon Valley Bank and Signature Bank, they failed over the weekend. Silicon Valley on Friday, Signature on Sunday. But it is important to note on Wednesday, crypto focused, pretty big bank, Silvergate said that they were shutting down operations. So it was on their own volition, but they pseudo failure. So it was really three failures there. Um, and Silicon Valley Bank, which is second biggest bank, that one's definitely the most interesting out of the three. So roughly what happened is starting on Wednesday, there was a complete collapse in confidence in Silicon Valley Bank. So I believe SVB was the 16th largest bank in the country by deposits before it failed. But a lot of that was, riskier type. They tended to have a riskier type of customer. I mean, implied by the name, it was a lot of these West Coast startups, venture capital firms, and they dealt a lot in more short term interest rate sensitive assets. Um, and so roughly what happened was breakdown in confidence in the bank's leadership, and they said they were selling some securities at a loss, and then there was a massive run. They were unable to meet customer demands. But again, it wasn't like something, and I mean, not that FTX was a bank, but it wasn't something as clear as an FTX where it's like, okay, like they, you know, there's some shady stuff going on that they clearly are, not doing the right thing with customers' money. They're clearly not as financially healthy as they would want you'd want someone holding your money to be. It was kind of, just a run amongst venture capitalists and people that had their money there. And then Signature Bank, similar story. And that closed on Sunday at the same time that the Treasury Department, Federal Reserve, and FDIC announced their measures to save previously uninsured depositors at both of those two institutions.
Derek, something that you said that I wrote down that I want to discuss is that you said that this was a breakdown of confidence in leadership. Is this a management problem, or is this a larger problem, maybe a broader economic problem where other banks can see potential ramifications?
So I'll say somewhere in between. I know, that there were some Silicon Valley Bank specific things. Like I know they had, you know, in the aftermath of things, you can see, cracks in risk management, and like I believe they couldn't hold down a chair for their risk committee. There's some things that seemed pretty specific, but again, I mean, it's not at this point. I know today it was announced, the collapse is being investigated by the Department of Justice and SEC, are not announced, but the Wall Street Journal is reporting that. So we'll see if there is criminal, if there are criminal implications. But at this point, I mean, it doesn't seem to be as clearly nefarious as maybe, um, some other high profile collapses have been. Yeah, and in terms of trickle, kind of the trickling. I mean, we saw a massive collapse in market caps of pretty much every single bank stock. So the top 10 largest banks by market cap, they lost, I think it was a combined $170 billion in market value over the three trading sessions, leading up to and following SVB's official collapse. But what experts pretty much all say is that these big banks, they're going to recover, and, to get, borrowing a term from Great Recession, but the big banks really are too big to fail to a certain extent. It would be hard to envision a scenario, what a run would have to look like in order for them to really face the similar liquidity issues. But with regional banks, there are real concerns. We saw yesterday, several regional banking stocks dropped as much as, I think, 70%. First Republic's a big one, of kind of a very direct peer of Silicon Valley Bank, San Francisco based, catering to higher net worth clients. But across the country, we saw regional bank stocks tank yesterday. A lot have recovered today. But some interesting, analyst commentary came out. I know yesterday, Bank of America cut their price targets for, I think it was 20 different regional banking stocks by an average of 14%. And there are a lot of concerns about, for especially the smaller banks, how they're going to handle potentially higher compliance costs, and how the federal government and financial regulators, I mean, if they are going to be, changing rules and such. So yeah, I mean, at this point, it seems like the consensus is that this isn't something where the contagion is going to spread and there's going to be some massive collapse, but there's definitely, enough there that we could see another regional bank fail.
Yeah, there's definitely been some panic over the past few days. You're expressing that there is concern for regional banks, smaller banks. Simply put, is people's money safe that are in these types of banks?
So, yeah, I mean, well, number one, if it's FDIC insured, I mean, that's, that will be backed. And then the Fed setting the precedent now that even money that's uninsured, that they would step in and help. So yes, cash in the bank would be insured, but what is not insured, and Biden mentioned it yesterday, are equity investors in these firms. So we saw the stocks for Silicon Valley Bank and Silvergate, they both pretty much lost 100% of value. So yeah, if you owned their stocks, that's pretty much worthless. So that's really why we've seen the stock prices collapse, because no one wants to be caught holding the bag. You don't want to then, even if your actual cash is safe, if you are an equity investor in these firms, that obviously can go to zero, as any other stock could be. So that's why kind of the concerns, are really, really, really being focused on. But it's interesting because there's still conflicting, things. And I think it's very weird with banks. I've always thought bank stocks it's always very weird with bank stocks. Like, and it's funny also when you see, these notes from analysts who work at banks and they're talking about banks, but that's a tangent. But what's very interesting too is you see these stocks go down. I mean, I think First Republic, which I mentioned before, but they were down roughly 70% over the prior 3 days, and now, as we're talking, they're up roughly 50% today. So recovered a lot of the losses. But there was an interesting note from JP Morgan on First Republic saying, dramatic overreaction, yada, yada. It said it was their favorite bank stock pick. But that came as Moody's, the rating agency, said they're reevaluating First Republic and 5 other banks, reevaluating their credit rating. And also Moody's sent out a note today saying downgrading their outlook for U.S. banking industry from stable to negative. So yeah, there's there's a heck of a lot to parse through there, and I think it depends a lot on who you ask about where things stand moving forward.
I mean, this story really sent shockwaves throughout the country. It's been on the A block of every news show. President Biden even responded. You mentioned part of his response. Can we now dissect what did he say in the wake of these bank failures?
Yeah, so Biden's response was he didn't take any questions. It was just a 5 minute prepared response. So it would have been interesting, especially as when he was vice president, helping lead the U.S. through the 2008 financial crisis. Would have been interesting hearing him, kind of answer everything. But there were some interesting, tidbits in his speech. One quote I liked was, "That's how capitalism works," referring to equity investors losing all their money. And obviously that that makes sense. I mean, the federal government is not going to try to falsely prop up a stock, but that goes to show. I mean, there is a limit to federal intervention. And he said that the federal government will do everything possible. Also mentioned that he plans to introduce legislation to Congress. We would have, I don't know personally what the fate of such regulations would be. But there's a lot of criticism from both sides of the aisle to the federal government's response. The Biden administration's been pretty steadfast, saying this isn't a bailout, but it pretty much is. And yeah, so there's been a lot of criticism. But yeah, I mean, I think Biden and his officials have tried to make this seem as isolated an incident as possible. And also with the bailout, I mean, they're very clear saying the taxpayers are not bearing the brunt of any of this cost. He actually said it twice. And that's not really true.
How is that not true? I want to talk about this because, as a lot of our viewers know, as I remember the great financial crisis of 2008 and those bailouts. Is this bailout similar to that?
So, no, yes and no, but more towards the no.
Because he made sure to say this is not a bailout, correct?
What was that?
He made sure to say this is not a bailout, right?
So yeah, him and especially Janet Yellen, Treasury Secretary, she went on a morning show on Sunday to clarify that. But so the technicality there is that it's money that's being used from federal banking fees and the offloading of Silicon Valley Bank's assets. They have not found a buyer to that at this point. So yeah, I mean, those are funds that are earmarked directly from the banking industry kind of being reinvested into it. But it's still money that's under control from the federal government and thus would be taxpayer. So I guess it's not taxpayer money in the sense that it's not, money coming from me or you's income taxes that's going towards this, but it is money that would be earmarked for public use. So yeah, I mean, it's not so much, I don't remember, exact numbers and magnitude of the bailouts, but that's it's several magnitudes less than the 2008, but it's still it's still a pretty drastic action from the federal government to ensure confidence in the banking industry.
Of course, and a quote that stuck out to me was him saying, President Biden saying, we'll do whatever is needed to prove our banking system is safe. So is this issue contained, or is this just a band aid kicking the can down the road for a potentially larger problem?
I mean, it's probably more so the former. Um, Again, I mean, I don't think I haven't seen anyone that's calling, saying they're expecting, larger institutions to fail. And I will say, I mean, said this before, but these were the second and third largest bank failures in U.S. history. So, kind of dismissing them it is probably not a smart thing to do. But the health of the 10, 15, 20 largest banks is not really in question. And we actually saw yesterday Charles Schwab, which is the seventh or eighth largest bank by market cap, but they had not so much run, but their stock was down, I think, as much as 20% yesterday. It ended up down 11%, and then added back on a lot of the losses during trading today. But that was the closest big bang. I think that there was definitely the most panic there. That they released a statement saying our liquidity is good. But a lot of the times with banks, when you have to release a statement saying your liquidity is good, that tends to that tends to precede some not so great things happening. But yeah, I mean, again, I mean, Moody's said they're looking at 6 regional banks. I think it wouldn't be absolutely shocking if we were to see one of these smaller banks, need to have the federal government come save the day. But I think it would truly be shocking if, there was something and there was some major event like we saw in 2008. I think also the big difference is that the shocks are way more contained. I mean, in 2008, it was kind of a banking industry wide problem, with all the uh, the bad loans, trading securities, yada yada. So yeah, I think it very, very unlikely that it will spread in a major way, but that's not to say that there won't be upcoming major issues.
Dare I say you sound cautiously optimistic? Obviously, you're saying this, and we can't discount that this is the largest collapse since the Great Recession, which you said. But did President Biden's actions, did his remarks do anything to tamp down fears?
Yeah, I mean, I think it's a pretty impossible situation to be in, and one term heard one term have heard a lot related to this, and just generally in economics as well, as moral hazard. So there's been a lot of criticism about, okay, like if this moral hazard of if you bail out these 2 banks and these uninsured depositors who knew that this was a possibility, then what's next? And that's always an issue with monetary economic policy. But I think there's way more to criticize and focus on what lack of regulation or poorly guided regulation maybe led to these circumstances. However, I think it's pretty hard to criticize the actions of the Biden administration too much. I think if they had not, guaranteed that these depositors get their money back, I think we would have seen way more panic about the banking industry as a whole. And obviously, you want to do everything possible to prevent that. I think it was a fairly conservative approach. I mean, and there's still some pretty strong criticism about the actions that led up to this. But yeah, I mean, I think that Biden and its top economic officials probably did pretty pretty good job, all things considered, in tamping down, kind of the worrisome sentiments.
I want to circle back to something you said earlier in the conversation was that some lawmakers on both sides of the aisles were criticizing President Biden. What has the response from lawmakers been?
Yeah, I mean, my colleague, or our colleague, Sarah Dorn, has covered a lot more about the response. On the left, Elizabeth Warren, who sits on the Senate Banking Committee, she's been pretty critical, especially critical towards Jerome Powell specifically, and a lot of criticism from the left, including from Biden, from Warren, is related to deregulation that came during the Trump administration, and criticism from the right has been, I think, a little bit less focused, I would say, and just I think it's criticism of not letting kind of the free market regulate things, because obviously this is a large government intervention in financial markets. So yeah, I mean, again, like, I don't think anything has been, extremely scathing, but I think yeah, I think, and Elizabeth Warren's issues too. It's like, okay, like, you're coming to save these billion-dollar, companies that knew that they had, maybe were not in the most secure business dealings, and then kind of leaving, the everyday American to bore the costs of this. So yeah, I mean, there certainly has been pushback, but nothing too severe.
It's certainly a huge story that we will continuously be covering. Derek Saul, thank you so much.
Thanks for having me. Great to chat always.